But let's focus on the first management that we have on the show. That's Rajratan Wire. It's in focus after reporting its Q4 FY25 earnings. The company's margins have seen a bit of a decline, but they're guiding for better times ahead. And as we speak, the stock is now locked close to around 20% higher in trade. To be now joined by Mr. Sunil Chordia to discuss the past quarter's numbers and the way ahead. Hi, sir. Good morning and good to see you win. Well, your stock price is telling you the picture. The street believes that the worst is behind now. Tell us, what's the road ahead for you? Last year, I think you did, double-digit volume growth. For this year, what kind of volume numbers should we be working with? And if you could break it up for us, in India, how much? As well as in Thailand, how much will it be?
Yeah, so Nigel, we had invested in a new capacity in Chennai. And that was the reason for not so good performance for almost, 1 year. Especially Q3 was not good. We didn't perform well. But I think the worst is behind us. And from here, you can expect that volumes will further grow. I would like to refrain from committing the numbers this time. But yes, we are set to grow from here, and especially the Chennai capacity utilization will improve in the coming quarters, which will be good for the financials of the company.
Okay, give us a few more details then. The Chennai phase 1, I recall, had got commissioned, and you were doing low volumes on a quarterly basis. How does that business ramping up? Last quarter, what kind of volumes you did in the Chennai unit? And you're refraining from giving us volume guidance. But can you hint at least a broad band? Can it be, in that vicinity of around 10-15%, more than that?
Yeah, so now, as you know, our Pithampur capacity is running at 90%. Thailand is also running at 85-90%. So the growth will come from shifting orders to Chennai as we are getting more and more approvals from our, marquee customers. We will supply more quantity from Chennai, which will I can see that Chennai this year should cross around 20,000 tons of volume in the coming financial year. Yeah. There may be some reduction in volume at Pithampur, but overall, I'll continue to say we'll grow in volume by 15% at least in the current financial year.
Mr. Chordia, good afternoon. Thank you for joining in. You mentioned there might be some decline in volumes at Pithampur, but you are procuring machinery for value-added wire ropes for that facility, and you are about to convert around 12,000 tons per annum of black wire capacity into to 10,000 tons per annum of wire ropes. By when does that complete and start showing in on your P&L?
Yeah, so, as you know, we already have a 12,000 tons per annum capacity of wires, which we are supplying to wire rope industry. And now our management has decided to do further value addition by making wire ropes ourselves. So we have procured plant and machinery, which has a capacity of 10,000 tons per annum. And it will take almost 1 year to complete that project. And the idea behind that is that we will have management capability, capacity, and technical knowledge to do this. And we also think that Rajratan has become a bigger company now. And depending only on one product may not be good for future. So we are testing this product to begin with. And if we are successful, there will be further investment in this product. Yeah, but currently it is to utilize the existing capacity of Pithampur for a value-added product rather than selling raw material to wire rope. We want to do it ourselves.
Okay, all right. And if you could tell us, who would your clientele be?
Clientele, these are engineering wire ropes and elevator wire ropes. So it goes into infrastructure, it goes into engineering application, lift, hoist, multiple applications. Yeah. And there is some potential of export also.
Well, so since you mentioned export potential, Mr. Chordia, what's the current revenue mix compared to domestic to exports?
No, we are right now not in wire rope business. We will start that. But our current exports from India are very low. This year we have done around 3,000 tons of export. But next year plan to export is around 10,000 tons from Indian ports to global market. And that
And
is
with
going to be bead wire. That is going to be only bead wire.
Right. And with all of this tariff related uncertainties that are going around all across the globe, have you seen any pushback from any of your clients? And how do you plan on navigating this situation, or does that not impact you at all?
No, right now it has not impacted us because the duty on our product is not changed. We are not affected by reciprocal duties of USA. There is a little positive in all this because China has been affected. And as you know, we have been competing in global market with China. So as of today, we have been positively affected. I don't want to say that it is going to be very long, benefit.
Okay, all right. But you stand to gain, right? If you can.
Currently we stand to gain, and we are seeing that the orders are improving.
Okay, all right.
Because China has larger duty on the similar product.
Correct, and that's been a bit of a pain point for you because they have, been dumping their material. Now that provides an opportunity for a company like yours, Rajratan, right?
Yeah.
Okay, all right. Just to get back on that point that you were talking about, the black wire capacity, which you're, converting to wire rope now. Could you give us a brief number? What is the average realization in both these two products? And will there be a margin difference as well?
Yes. So currently we sell that product with a EBITDA margin of 7-8%. And if we do value addition and make wire ropes out of the same production capacity by adding finishing capacity of wire ropes, we are expecting the margin to be similar to bead wire.
So margins will be similar in both.
Will come back to
what bead wire? This 12-13% that you're doing.
Consolidated, we are doing 14%, and
Yeah.
includes black wire also, okay, which
Okay.
is small quantity but lower margin. So I
Yeah.
expect 15-16% EBITDA in a competitive market we should get.
Correct. So currently you're getting around 7-8%, which because you're going to be converting it into a more value accretive product, you can get 15-16%. And if you could
Exactly.
give us a brief idea on the realizations, what is the difference?
The wire ropes depends on the construction and sizes, but it is close to 100,000 rupees a ton. Yeah.
Okay. And what is the difference between the two?
The selling price difference is around 25,000 rupees. Value addition will be doing from here. Like we sell wire at 75 rupees a kg, and wire rope we expect to sell at 100 rupees a kg.
Right. How's the cost picture shaping up for you, Mr. Chordia? Because the quarter gone by had raw material costs that were lower both sequentially as well as on a year-on-year basis, but your other expenses had seen a sharp jump. Could you
Yeah.
quantify as to what led to that jump, and also what's the cost situation looking like on the ground for the ongoing quarter?
Now, if you look at India numbers, these numbers include the cost incurred in Chennai. Okay, so you will see that at EBITDA level, we are close to last year's number in spite of volatility in the market, in spite of global turmoil in the market. But there is a heavier cost of depreciation and finance cost, and also other expenses. So all put together, this will go down in coming quarters because Chennai will start making more production, and it will be divided over larger production. Yeah.
Okay, all right. Very quickly, sir, before we let you go, as of now, you've given us the one number that 15% volume growth is something that we could be looking at for this year. And Chennai facility will contribute 20,000 tons. So we have got those numbers. If you could tell us on the margins, what should it look at since now, things have got streamlined. There was a time when you were doing margins closer to 20%. But now it's settled down in this vicinity of around 13-14%. On an average for the year, since you're going to have the benefit of operating leverage, what should the margin look like? Around 15% would be doable?
Nigel, we are not projecting much of margin improvement because
Okay.
the 20-21% were post-COVID when China was shut.
Yeah.
We very well realize that China is back into action. They are selling material across the globe, and we are fortunately able to compete with them. Coming
Yes.
back to the Indian market, all our competitors have increased capacities, and there is a pressure on the price in India also. But fortunately, Rajratan has good number of clients, good approvals, product quality is good. So we are still able to maintain this profit, and going forward, there will be some improvement in profit because of the higher quantities we target to sell.
So
which
margins will,
will reduce the cost, hence
right.
margin. Yeah.
So margins, sir, will be in the vicinity of 13-14%, right?
It can be little better than 14%.
Little better than 14% for the time being. And what about, in revenues, what should it be? I think last year we were chatting about it could be closer to around 1,000 crores. You've ended, I think, somewhere in that vicinity.
No, we
Revenue,
have done 937, but
yeah.
part of it is has gone into capitalization. You will see in our annual report. So we have done around 950 crores of top line, and next year definitely we are doing 1100 crore plus.
So one final question from my end, Mr. Chordia, since you mentioned competition and everybody increasing capacity around you as well. So if you may not want to take price hikes in the near future, you may not cut prices as well. And so just to ensure that your margins remain where they are.
Yeah, so we know that we are competing in the market, but as you know, this is a difficult product. Putting up capacity is not enough. Getting approval from key customers is the answer to this business, okay, which takes very long time. We are fortunate that our Chennai facility has got major approvals in place, and that is why we will be able to sell 20,000 tons from there this year.
Okay. You spoke about competitive intensity, sir. I recall, when things were going all guns blazing, not just a China factor, domestically, a couple of large players had shut down, which helped you on market share. So
Correct.
just give us a couple of details. What is your updated market share here in India? And what about Thailand?
We remain around 40% in India.
Okay.
And in auto, it is more than 40%, but overall bead wire, we are 40%. And in Thailand, we have closed the year with 32% market share.
32% market share. All right. Grace, Mr. Chordia, thanks a lot for joining in and giving us all those details. We'll hold you to these numbers. There could be an incremental benefit because of the pressure that's being put on the Chinese in the open market. And as you're saying, you have capacity coming on stream, so you'd like to ramp up out there. Thanks a lot for joining in.
Thank you.
That was the management there of Rajratan Global Wire. There are interesting comments that they made with regards to their market share and even to the pricing bit that they mentioned. And they also mentioned that their Chennai plant will be able to supply more orders going forward as well. The stock in a 20% upper circuit as we speak, and has been the case throughout this session. We'll take a short break, but just